Very good morning to all of you. On behalf of Committee for Members in Practice of Institute of Chartered Accountant of India, I welcome you all in today on corporate social responsibility and effective regulation of corporate sector. In order to tackle these two important topics, we are having two eminent personalities, eminent speakers with us. In order to tackle this corporate social responsibility, we are having with us the chairperson of Center for Sustainability and Corporate Social Responsibility, BIMTech, Dr. K.K. Upadhyay ji. So, on behalf of Committee for Members in Practice, I welcome you, K.K. Upadhyay sir. Welcome to you, sir. Namaste. And we are having our very eminent speaker, very renowned person, the additional deputy CAG, sir, Shri Ramohan Johri ji. Sir, on behalf of CMP of ICI, I welcome you, Ramohan Johri, sir. Welcome to you, sir. Welcome, sir. So, sir is going to take the effective regulation of corporate sector. So, before we start, it is my proud privilege to share with all of you the brief profile of both these speakers today. So, first of all, let me introduce Dr. K.K. Upadhyay ji. Dr. K.K. Upadhyay ji is widely respected and seasoned development professional with over 39 years plus year of experience across government, not-for-profit academia, and corporates. He has pioneered several innovative and outstanding social enterprises, Safal of Government of India, Apni Yojana of IIHMR, Bastar, Integrated Development Program of Denmark, and Health of Urban Poor for USAID. Dr. Upadhyay has been a pivotal part of CSR journey in India as a thought leader. He is a practitioner and former head of FICCI at the Aditya Birla CSR Center for Excellence and contributed to the sector through several publications and research studies for USAID, UNIFEM, and IIED London. At present, Dr. K.K. Upadhyay is a professor and chairperson, Center for Sustainability and CSR at Birla Institute of Management and Technology, BIMTech. Dr. Upadhyay has been bestowed with many awards and accolades, including titles like Sterling 25, CSR Times, Thought Leader, CSR Leader of India, the CSR Trainer of the Year 2020, Mahatma and Change Maker. So, welcome to you, K.K. Upadhyay, sir. It's a long list which I have to elaborate. Welcome once again, sir. We have another eminent speaker here, Ramohan Johri ji, Additional Deputy CAG. Additional Deputy CAG. He is relating to the with the auditing information system, forensic environmental, accounting standard including IPSAS and IFRS, e-governance, project program management, capacity building programs. He has contributed to the deregulation of the power sector in India by formulation of guidelines 1995 for entering into the contract with independent power producers, including Enron, for generation and supply of electricity. This resulted in renegotiation of the contracts with multinationals saving foreign exchange for Government of India. He has established a system of real-time budgetary financial control system while working in Ministry of Education on foreign assignment to Government of Botswana. He has contributed towards implementation of World Bank and Department for International Development Projects since 1998 till 2005. He is a team member of Landmark Audit Report in India on Enron 1996 and auction of 2G spectrum and allocation of coal fields, which highlighted the governance deficit in Government of India from 2011 till 2013. He has posted as a Director General ICISA International Center for Information System Audit. Based in Noida, this center was declared an International Resource Center in Information System Audit by INTOSAI, International Association of Supreme Audit Institutions. During the tenure, as on date, he has trained 5,000 professionals from 146 countries in different aspects of audit and governance since 2017 and 2019. He is presently working with CAG office, led the audit team in various prominent national and international assignments, including UN bodies and authorities, mainly UNDP, UNEP, UNICEF, WHO, WHO, FAO, and WFP. CAG was on the UN Board of Auditors from 1996 to 2002 and has again appointed from 2014 till 2020. He is a team leader for the comprehensive audit of UNJSFPF for the accounting years 2015 and 2016 and separate audit report on accounts won the appreciation of UN General Assembly. He has worked as a technical advisor to the International Public Sector Accounting Standard Board, IPSAS. He has also been actively involved in the government accounting standards formulation and implementation and the migration of government accounts to accrual basis accounting. He is designated as a Chief Information Officer of the CAG institution who conceived, designed, and implemented a number of IT projects in the department. Some of the prominent among them were development of 65 websites to make the working of the offices transparent and effective, and making the pension and provident fund accounts available to the government employees in real-time manner. And he is establishing budgetary financial control system with forward integration to e-payment and backward integration by real-time generation of account for all the 209 offices of the SAI institution on a daily basis from 2010 to 2013. He has conducted 2,000 financial attest audits, 200 performance audits, and 250 IT audits as on date for the union government, state governments, and municipal corporations, and on integrational bodies and authorities. In his 30 years of service, he has represented the department and delivered about 500 lectures on audit, accounts, and information system audit at various national and international forums. Presently, he is holding a charge of Vice Chairperson of GAZAP, Government Accounting Standard Advisory Board, which is mandated for the prescribing the accounting standard for the government accounts. And at presently, he is appointed as a Government of India nominee on the board of NAPRA, National Financial Reporting Authority, which is not only the approver of the accounting standards for all the bodies, all the corporate bodies and authorities registered in India, but also a regulator for the profession of accountancy, accounts and audit in the country. He has contributed as a technical advisor to the International Public Sector Accounting Standard Board, an active member of the expert committee of the Institute of Chartered Accountants of India for drafting the accounting standard for local bodies. He is also a member of committee to formalize IT audit manual for the International Association of Supreme Audit Institution, INTO-SOI. He is a member of the committee to draft, pursuit a biennial journal of the IS audit by SAI India. So he is a Bachelor of Commerce, BCom Honors from the University of Delhi, 1982-85 batch, Chartered Accountant, 1985 to 88 batch. He secured 11th All India rank while working with the PricewaterhouseCoopers. He is a Cost Accounting ICWI, 1985 to 87 batch, and Certified Information System Auditor, Illinois, USA, 2000, Certified Internal Auditor, Florida, USA, 2001 batch, Certified Public Accountant, AICPA, Denver, USA, 2003 batch, Masters in Public Management, MPM from Harvard Kennedy School, USA, and Lee Kuan Yew School of Public Policy, Singapore. Is a membership of, in addition to membership of the professional bodies for which he holds the certification, he is an alumni of Indian Institute of Management, Lucknow, and Indian Institute of Management, Ahmedabad, and Lee Kuan Yew School, Public Policy, Singapore, and Harvard Kennedy School, USA. Still, this is very big. It will take more 15 minutes to elaborate. Sir, welcome to you, sir. Welcome and hats off to you, sir. Thank you so much for gracing this occasion. And thank you so from the core of my heart and on behalf of CMP of ICI, I'm thanks to for you for sparing your valuable time. And everyone is eager to have your words of wisdom after the deliberation of KK Upadhyay. Welcome to you, Ram Mohan Jori, sir. Welcome to you, sir. So it was my proud privilege to share with all of you the brief profile of both these eminent speakers. Now moving on towards the first technical session, that is the corporate social responsibility, which is very, very, very important in today's time for all of us as well as all the corporate sector. So we have with us the eminent chairperson, sir. So I request Dr. KK Agrawalji to please honor all of us with your words of wisdom and enlighten all of us on the corporate social responsibility. Over to Dr. KK Upadhyay, please.
Thank you, sir. It's my privilege to be here with you all. I really enjoy CSR. It has been a passion, and I got the opportunity to work with government. I was with National Dairy Development Board, then work with the international organizations, Foster Parents Plan in International, then worked with corporates, JK Group, Hurka Group, and then be with the Federation of Indian Chamber of Commerce and Industry. It has been a journey, but I have seen development from different aspects. And that's what I'll be talking to you today. Whatever you call it, CSR, If you really look from the international perspective, it means a lot of things. Whether you talk about a triple bottom line, corporate responsibility, sustainability, corporate responsibility, it means almost the same thing. So different words. That's what we find when we go to the websites also of different companies. They publish their reports in different ways. Corporate social responsibility, what we call it generally, is business responsibility. How business, they are responsible for. Why CSR? A lot of people ask me this question. Let me tell you 3-4 things. First, the world's population. If you really see in this graph, it has been increasing over a period of time, and especially of late at a great speed. In 1700, we were just 600 million. Today, 7.7 billion. And by 2100, we will be 10.9 billion. If you see country-wise, China is number one with 18.5% of the world's population. India is number two with 17.9%. As per a study by the UN, by 2027, we will cross China. So we'll be number one. First thing is the population in the world. And second, world population living in extreme poverty. Here, someone has plotted from 1820 till 2015. As we saw, the population has been increasing. Two things happening. The red one is number of people living in extreme poverty. Where even in India, at time of our freedom, we were 36 crores. And poverty was 80%. Similarly, in the whole of the world, in 1820, people living in extreme poverty were more. With time, their number has decreased, but people in extreme poverty, there is still plenty of population. India, a recent study showed that when we were under the colonial rule, say 1900, this was the gap in the population, in the poverty. In the rich and the poor, today we are almost at the same level. Poverty as such has gone down from independence 80% to 22.5%. But when you see the number of poor in the world, we still top the list. In numbers, in percentages, we have gone down all over the world. The top 0.01% rich hold 11% of world's wealth. In India, 1% own 53% of India's wealth. I'm talking to you about the gap in income. At the same time, in 2018, as per a survey, rich became richer by 18%. And that's a world over phenomenon. At the same time, especially during the pandemic, the wealth owned by poor, the bottom 50% has gone down. In a way, you can say, rich is becoming richer and the poor is becoming poorer. Urbanization, whereas in 1800, world was 3% urban. 1900, 15%. By 1950, 30%. By 2000, it was 45%. And is estimated by 2050, it will be 70%. 50% of which are yet to be built. There's going to be more urbanization, and half of it has yet to come. For them, we need infrastructure. In India also, in 1991, we were 26% urban, 2021, 28%, 2008, 30%, and by 2030, we'll be 40% urban. Climate action. Climate change is becoming very important, especially of late. We had a COP26, and the efforts was that Earth's temperature should not increase by more than 1.5%. There are different schools of thought. Whereas government of India made a commitment of 0% by 2050, lot of activists feel that not enough is being done. Whatever is required. So climate is becoming a major issue. Economy. World economy is increasing. Same is case in India also. The question which arises is development at what cost? Prosperity at what cost? And what this progress means. Let's listen to Ratan Tata.
I think in a necessarily create differences in lifestyle and facility for your employees as against the community to operate. There has to be a sensitivity.
Voice is not off. Yeah.
What Ratan Tata has been talking about, he has been talking about that there is, let me tell you story of Jamshedpur. When Tata started, it was a very small village. Factories started coming up. The employees they had, and it became a town. When it became a town, the employees they had to arrange for health, for their children for education. Then the facilities were extended to the community. Still, in CSR, education remains number one. Almost 33% of spending on education. Then comes health, infrastructure, rural development, livelihood, What he's talking about here, that you just can't survive if you keep on building facilities for your employees only, where all around is poverty. You cannot continue like that. Therefore, it is very important that you care for the communities and you must care for your employees also.
I think in a
John Elkington, he worked on CSR, one of the major thought leaders. In 60s and 70s, we were as a corporate in a denial mode. Then came the whole era of legislation. 70s, 80s, we were in a compliance mode. By 19th, we started CSR. This was the time when in FICCI, we started our CSR awards. So CSR is not something very new. Then whole era of social innovation. We started with the age of greed, where it was a defensive CSR, doing something for the sake of it. Then came the era of charitable CSR, the age of philanthropy, where companies and the businessmen, they started working for charity. Then came the whole era of promotional CSR. Then strategic CSR. That's what we are talking today. And the age of responsibility. Whenever you talk about CSR, please understand one thing. There is more money in philanthropy as compared to CSR. I was in a jury to award CSR awards, and a company was getting the CSR award, whereas one of very eminent writers who had been with corporate for long wanted to give it to a particular person in a company. Our argument was that what he does is out of his philanthropy. And lot of companies, they do very nice philanthropy. And Jamshedji, he tops it. Today, Ratan Tata is in charge. They do a lot of work in education and healthcare, right from Bill Gates to Warren Buffett, all work on personal philanthropy. There is a lot of much more money than CSR, philanthropy, and lot of time people confuse between them. Bill Gates, he has given 50% of his wealth. Warren Buffett, 78% of his wealth. In India also, Ajim Premji, Shiv Nadar, Ronis Gruwala, Nandan and Roni Nilekani, Kiran Majumdar Shaw, Ratan Tata, all have given their money to what I call personal social responsibility. Ajim Premji, he donates almost 22 crore a day. almost 7,904 crores in the financial year 2020. And they do excellent work in social field. Milton Friedman, he said, the business of business is business. The only one responsibility of business towards the society is the maximization of profit to the shareholders within the legal framework and the ethical customs of the country. Jack Walsh, former chairman and COG, said, even in these uncertain times, every company should practice good corporate citizenship, but they also need to face the reality that you first have to make money before you can give it away. Companies make profit. I always tell my students, you first earn profit, then out of that profit, you spend 2% on CSR. Whereas, when I talk to you about business responsibility, I'm talking to you about other 98% also. How do you earn your profit? Then, also, how you spend it on what we call technically now in India, CSR. India, 7th largest country by area, second most populous. Our GDP is going at a fast rate. This year also, around 9.5%. However, we continue to face the challenges of poverty, corruption, malnutrition, and inadequate public health care. Whereas we are 5th or 7th by different standards when it comes to economics. But when you see the global Human Development Index rankings, we are 130. Norway being number 1. Switzerland, Australia, Ireland, Germany. And when you see GDP, our GDP from 1991 to 2020, per capita GDP growth has been 6-fold. Poverty from 47.6% to 22.5%. But at the same time, we slipped in gender index, hunger index. We have slipped by almost 101 points. We, as a nation, in development sector, we always love to talk about India versus Bharat. Take any parameter, we have progressed. But still, there is a divide between India and the Bharat, between the rich and the poor, and now the digital divide. Whereas around 34% coverage in urban area, about 14% coverage in rural area of internet. Education, especially with the pandemic, being in education sector, a lot of issues. a lot of concerns, especially when you go to the education of the children. 80% children being in the rural area, in the government schools, the divide is increasing. And what we are talking about? We are talking about 24 crore children. A question arises. Can we continue to do business as usual in the societies that fail? If societies have these conditions, can we really continue to do business? Answer is no. What's the answer? What's the solution? What we need is inclusive development, where everybody grows, and even the government takes care of that. Union budget, as our finance minister, she started her budget speech. She talked about 4 pillars. One of them was inclusive development. Different programs launched for that. What India needs today is inclusive development. We talk about 4 pillars of CSR. We talk about labor, environment, human rights, and corporate governance. We generally refer to them as people, profit, and planet. The 3 Ps, triple bottom line. And when you talk about 3, people, profit, and planet, you are talking about sustainability. The best definition of sustainability I came across is, can you leave the earth as such for your generations to come? And that's where we talk about sustainable development. A development which can sustain. When we talk about labor, we are talking to ensure employee welfare. When we talk about environment, we are talking about engaging with the stakeholders. Human rights, how do we protect human rights? But when we talk about governance, we are talking about inclusive growth. And when I see in Indian context, what CSR today means? CSR today means, in our Indian context, sport inclusive growth. CSR, as mandated by the 2% clause in the Company Act 2013. So when I talk about CSR in general, I'm talking about employee welfare, stakeholders, human rights. But when I talk about CSR in India, I'm talking about inclusive growth. There have been different stages of CSR. A time when India was called Sone ki Chidiya. 34% of world trade used to come from India. And our traders, they used to travel all over the world. Then from 1914 came this whole theory of trusteeship, which Gandhiji promoted. Then the third industrial revolution, where things started changing at a very fast rate. In Sone ki Chidiya, the number 1 item was textile. We were the best in the world. With Industrial Revolution, it went to other countries. Then the whole era of public sector units. And a lot of times I have seen that it's not as simple. A lot of Indian companies. I used to work with Aditya Birla Group. 40% business comes only from India. They work in more than 36 countries. And then whole era of CSR. We started with domestic charity and the business. They supported the freedom struggle. Then came the area of family trust, where families promoted different trusts. Then introduction of the 2% clause. From profit to philanthropy to community affairs. Then corporate community and sustainable business. Mahatma Gandhi said, the industrial classes should regard themselves as trustees and servants of the poor. The wealth they earn, they are the trustees for them. Then comes a new game changer. The Company Act 2013, Clause 135, about corporate social responsibility. This has been a process. Adoption of inclusive growth in 11th five-year plan, 2 NVGs in 2009, to Standing Committee in 2010, and then NVGs 12, Business Responsibility Report, and then mandatory provisions for CSR. Company Act 2013, under Chapter 9, Accounts of Companies of the Companies Act 2013 deals with corporate social responsibility. Clause 135 contains 5 subclauses. And then we work around Schedule 7 of the Companies Act. And this was done for the first time in the world. You know, net profit of 5 crore, turnover 1,000 crores, or net worth 500 crore, they have to do now. They have to comply with the law. In 1920, 21,000 plus companies in 7 years spent 1 lakh crores on CSR. In 2014, we started with name or shame. Let the companies do CSR. If they don't do CSR, they have to tell in the public why they are not doing it. That was either comply with the law or explain why you are not doing it. But 2021, we have come to comply or pay penalty. Either you comply with the law or you pay penalty for it. 1 crore for the company, 2 lakh per officer. The landscape changed in 2021. We had PM CARES Fund, around 7,056 crores in just 2 months. Most of it from CSR. And companies also spend a lot of money on COVID-related activities. Even in this year, when I work with companies, a lot is being spent on COVID-related activities. Vaccine, temporary hospitals, PPE kits, and skills for the people who migrated from cities to the villages. We saw all those pictures. So 2021, we had a lot of amendments, and CSR has become mandatory in the real sense. If you don't spend, put it in a fund. Within 3 years, spend it, or you have to transfer it to a fund mentioned in the Schedule 7. So the whole landscape has changed. We have moved from Millennium Development Goals to Sustainable Development Goals. From 8 goals, 21 targets and 60 indicators, to 17 goals, 169 targets, and 304 indicators. We have achieved. There has been a lot of achievement, but not at the desired level. Let me try. No, it doesn't work. We have moved from MDGs to SDGs, and achievement has been 50%. In India, it is implemented by Niti Aayog, and Niti Aayog ranks the states. We do a calculation, there's a whole system for it, from 0 to 100. 100 being the excellent. As per the last report, Kerala stands at number 1 with 75 points. Himachal, Tamil Nadu, number 2 with 74. Andhra, Goa, Karnataka, Uttarakhand with 72. And the lowest being Bihar with 52, Jharkhand with 56, Assam with 57. And as per those 17 indicators in Sustainable Development Goals, we also rank for each the states also. No poverty, Tamil Nadu. Zero hunger, Kerala. Good health and well-being, Gujarat. Similarly, for life on land, Arunachal. And peace, justice, and strong institutions for Uttarakhand. Now we are doing it for CSR also. If you see any report, any annual report of the company, or even the CSR report, you will find mention of the SDGs there. We use different standards, frameworks. Mostly being used is ISO 26000, which is a guideline. But in India, we have developed now Bureau of Indian Standards, BIS 26001 and BIS 26002, where we are going to rank companies from 1 star to 5 star. And also a lot of companies report on IR, the integrated report, GRI, global reporting initiatives, having different series, 100, 200, 300, 400, and practically a standard for everything. You can find them on the board. And then our SEBI, Securities and Exchange Board of India, has mandated BRR, Business Responsibility Report. Now, we are moving from BRR to BRSR, Business Responsibility and Sustainability Reporting, from 1st April 2022. Is mandatory for top 1,000 companies. And then you have to report twice now on MCA website and in your annual report. A lighter version is also available. And this is as per the report of the Committee on BRR. In 2020, we moved from NVGs, National Voluntary Guidelines on Social, Environmental, and Economic Responsibilities of Business, to National Guidelines on Responsible Business Conduct. BRR, it has 9 principles, and companies report on all those 9 principles. Here, I'm showing you BRR from Reliance Industries with the tagline, Naya India Ka Naya Josh. NVG's principles, ethics, transparency, and accountability, product life cycle sustainability, employee well-being, stakeholder engagement, human rights, environment, policy advocacy, inclusive growth, and custom value. National guidelines on responsible business conduct have these 9 principles. In the interest of the time, I won't read them. And also they are related to the Organization for Economic Cooperation and Development, OECD, an international organization that builds better policies for better lives. And these are their principles. It's also called G20 OECD principles. From openness, transparency, engagement with participation, leadership, political commitment, to procurement of digital technologies, legal and regulatory framework. SDGs, they are related to NGRBC. In this figure, we have tried to collate them with the NVGs, NGRBC, to the Sustainable Development Goals. Another concept which is emerging very much is alignment with ESG, social, environment, and governance. These are the reports from NIF, which tells about our development in Sustainable Development Goals. Of late, in social sector in particular, we are talking about social impactment bonds and social stock exchange. On social media, lot of talk about Samaj, Sarkar, and Bazaar. If you go to social media, when you talk about CSR, we talk about Samaj, Sarkar, and Bazaar. Mahatma Gandhi said, there is enough for everybody's need, but not enough for everybody's greed. If we care for the planet, we work very well on CSR, we can meet our needs. But there's not enough for everybody's greed. That's why we are talking about the corporate social responsibility, and what we have done during these years, especially when it has become mandatory. As I told you, we have moved from a poor economy during the external rule to rapidly developing economy. And at this point of time, new leadership from Indian government, industry, and the civil society. Idea is by 2030 and beyond, can we be a developed economy? That's the aim. Can she live and hope to live in a developed India? Answer is yes. Thanks a lot. Thank you.
Thank you so much, sir, for wonderful deliberation, sir. Can you hear me, sir?
Yes, sir. Thank you very
Sir,
much.
there are two questions. It was the wonderful and marvelous deliberation, sir. You have covered a lot of things during your deliberation, sir. There are two questions, sir.
Yes.
Sir, one member is asking, my client has entered agreement with NGO for implementation of CSR project for the period of 1 year, which is beyond financial year, that is August 21 to July 22. Is it okay since CSR project will not be completed before year and March 22, though the funds has been disbursed before March 22?
Very nice question, but
Pardon?
very difficult answer. Very nice question, but very
Yes, sir.
difficult answer.
Yes,
Because
sir.
the law doesn't clearly clarify it. As I understand, as after 31st March, the money which you don't spend for this year, you have to put in a unspent account.
Yes, sir.
And there is a lot of deliberation going on around this, especially with regard to NGOs. Their excuse is pandemic. I have come across a case. I won't tell you the name of the company, where company is asking the NGO, which has not spent around 2 crores from the 3 crores which they have sent them. Now, what to do with them? That's what we are deliberating. Technically, as per the law, they have to put it in an unspent account after 31st.
Yes, sir. Yes, sir. Sir, can a society registered under section 12A and 80G, having few objectives in MOA, few of which are similar to the mentioned in schedule 6-7, become a receiver of corporate social responsibility contribution for the companies?
Both are not related. First, you have to get a 12A and 80G. Then go to MCA website and register under CSR1. For implementation of CSR, CSR1 is mandatory.
Yes, sir.
For CSR1, you have to have 12A and 80G. Thank you.
Yes, sir. Sir, very different question regarding the definition. He is saying, does corporate include individual person also? If yes, why? If not, then why not?
I didn't understand.
He's saying that corporate include individual person. If yes, then why? If not, then why not?
That's what I was trying to make it very clear. When we talk about CSR, especially in Indian context now, what I call it 2% CSR, then we are talking about the company alone.
Hmm.
But when we talk about philanthropy, we are also talking about the philanthropy which individuals does. Like I gave you examples of Ajim Premji, who spends about 7,000 crores a year, and Tatas are famous for it.
Yes, sir.
Individual and a company, they are different. Different laws apply to each.
Yes, sir. Yes,
And the more
yes.
they spend also, that's also different.
Yes, sir. Yes, sir. Sir, can a corporate make advance payment against future obligation? If yes, in how many years it can be adjusted?
Today I'll restrict to CSR only. In CSR, we have what we call ongoing projects now, and you can have your own ongoing project for 3 years.
Yes, sir. So, sir, these were the questions for you. Thank you so much, sir, once again for your wonderful deliberation. And once again, thanks on behalf of CMPR for ICI for sparing your valuable time and acceding to our request on a very, 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 very short notice, sir. Thank you so much, sir. Thank you so much. Thank you for your words, sir. Thank you, sir. Moving towards our next technical session, we are having with us our own chartered accountant from our fraternity, from our members, very senior member and very renowned speaker, Sri Ram Mohan Jori ji, and he is going to deliberate on the topic relating to the effective regulation of the corporate sector. So I request Ram Mohan Jori sir, please share your experience and enlighten all of us with the expert knowledge, sir. Thank you so much, sir. Please, over to you, Ram Mohan Jori sir.
First of all, a very good afternoon to all the people who are listening to me. In fact, it's a very difficult job because if you get a very long introduction, it's a twin-edged sword. In the sense the expectations arise and perhaps you have to rise to the occasion and to be able to meet those expectations. And especially the questions which have come in the end make me feel that I have to be very careful with my words so that similar questions, when they come towards the end, I am able to respond to them. Well, before I share my presentation, the concept of regulation I would like to deal in, because it's very important to understand the overall perspective that how this concept of regulation came in and why it is necessary for the government to enter into that, what are the considerations in their mind, and if you have to develop a regulatory system, then what are the considerations which you have in place to be able to meet them. So here I go. In fact, the present system of development, industrial development, is more private sector oriented. What happened in the earlier times when the developments were at a lower level, it was the government which used to take initiative and do the things. The reason was that you have to create an environment for development. You have to invest in infrastructure. You have to invest in basic facilities because those would be required for the private sector to come in and exploit and make their business run. And these facilities usually require huge investment and their return comes after a lag of time. So government in most of the countries took in, and in fact, if you see UK, you take USA, earlier the government was doing most of the things because it was creating that environment which is necessary for the development to take place. But later on, there were two basic systems of development. The one was the capitalist system and the other was the communist system. In the capitalist system, it was felt that the private enterprise is a must to have efficiency and effectiveness in delivery, and they can serve the purpose. But governments who were already in the business, they found it very difficult because they felt that if the element is completely given to the private sector, then maybe they will create monopolies and they will dictate the terms, and the public at large may not be benefited. So what needs to be done to regulate the private sector so that the overall objective of benefit to the people at large can be achieved? In fact, in most of the countries, the first industrial development happened through the government initiatives. Everything was government owned. But when they realized that it is not a very efficient way of doing things, the private sector was increasingly encouraged to come and participate. In our country also, if you see from 1991 onwards, there was a lot of deregulation. Many areas which were earlier reserved for the public sector or the government were given away to the private sector. And look, the economy has prospered over a period of time. We see from 1991 onwards till date, a 30-year period. It is an eye opener to us. So, to say that perhaps that was not a nice decision may not be true. But then, how do we make the best of things? So, what are the considerations? Essentially, regulation is a controlled environment. But what are the main motives behind it for creating that controlled environment? Well, there are two principles which are basically followed. One is the efficiency principle, and the other is the equity principle. We have to understand that is the basic concept behind regulation. The equity concept is the government intervenes to maintain competitive trade practices. That is an efficiency goal. In the sense that if government does not intervene, then perhaps it result in monopoly, and certain main players will dictate the rules of the game. And the second is the regulation is also necessary to protect the vulnerable parties in economic transactions. That is what equity goal. Like if government does not intervene, then perhaps it will not be equity because certain people are not at a level that they can compete on equal basis with the rest. So how that equity is there? So best in these two terms have to be very well understood. The basic considerations behind the regulation process is that it is designed to achieve efficiency and equity. The other thing which I would like to say is that in fact, if as a citizen you ask me or for a person, any other person for that matter, regulatory quality captures the perceptions or the ability of the government to formulate and implement sound policies and regulations that permit and promote private sector development. So if you got a very effective regulation, then perhaps the things would be managed very effectively and there would be a level playing ground for the private sector to come in and play their role and contribute to the efforts of the government sector. So those are the things which are very important to understand in a regulation. Then perhaps one needs to understand that regulation is different from the law. In case of a law, it is passed by the legislature, it is a requirement which needs to be done. Whereas the regulation is mostly done by a government agency. It implements the given law of the legislature. Rather, it creates the environment in which that law can be implemented. Whereas the law governs everyone equally, while regulation only affects those who deal directly with the agency or who are within that area of activity or who are responsible for enforcing. It does not apply to the public at large. So if you are doing about regulation in a particular sector, say telecoms, the Telecom Regulatory Authority of India is there. If you say it is in case of shares market, the SEBI has also a regulatory role to play. Similarly, there are other things like in electricity sector, on the real estate sector, we see many regulators which are coming in. In fact, this is the role of a regulator here is to monitor the compliance with the contractual obligations to the government and the users and other legal and regulatory requirements. So these are the basic objectives for which the regulation comes into place. In fact, to put it formally in the form of a slide, now I would like to share my slide and take you from there so that the presentation becomes a bit more organized.
Fine, sir.
Are you able to view my slide?
Yes, sir. Yes, sir. Fine, sir.
Okay. First, I'll deal with the objectives of the regulation and who is involved. And in fact, regulation is used for a variety of purposes, but the main among them is to protect and benefit the people, businesses, and the environment, and to support economic growth. In fact, this is the ways by which government can fruitfully engage the private sector in its effort and regulate their efforts in a manner that it achieves its aims. It is very distinct from the direct government provision or commission of services because it relies heavily on using incentives to derive a behavioral change in the individuals and organizations which are outside the government's direct oversight. Something which is owned by the government will tell them what is to be done. But if something is not owned by the government, it is not possible for it to influence the behavior of that organization to behave in a more responsible manner. And that is the role which is played by the regulations. So here the main objective is to determine who or what should be regulated, how this will be done for achieving the desired public policy outcomes. Because any sector you take, say if it is education or say it is infrastructure or health, there are certain outcomes which are in the mind of the government. Like when we came up with say Sarv Shiksha Abhiyan, the idea was that free education has to be provided to all the persons who are in the age group of 6 to 14. And then after that, it became a law. Right to Education Act was passed, in which it became obligatory on the government to go ahead and provide those services. But then if private sector comes in, how does government ensure that it is playing the designated role in the manner in which it was originally envisaged? So there lies a need for a regulator or a person who can oversee the functioning of the private sector, that the rules of the game are being followed so that the outcomes which were designed or which were conceived by the government, those can be achieved. So the scope and remit of the regulation may need to be updated or adapted because the situations keep on changing. The market situations keep on changing. The economic and the societal conditions keep on changing. Think of a situation in which everyone is educated in the country. At that point of time, perhaps for government to have a law like right to education will not have much meaning. Similarly, if we reach a level in which health is available to all and the facilities are enough to cater to the health needs of all, government will not have to make direct interventions to provide those services. So what happens in regulation is a very, very wide field. In fact, when I was doing my master's in Harvard Kennedy, I had taken a paper on regulation. And at that point of time, the first feeling which came to me was that perhaps regulation is far more complicated exercise than doing the activity yourself. Because when you do the activity yourself, you can tailor to suit your requirements and you can monitor it very closely and you can get the things done because it is under your administrative control. But when you have to deal with certain people who are not in your administrative control and they play a major role in achieving those outcomes, then how do you influence them and expect that a suitable behavior comes from them to be able to assist the government in its efforts? That is where the regulation comes in. So it has to move with the times, with the ground realities, with the situation or the level of development you are in, and then take decisions. Well, it has different roles for different people. In case of businesses, it is to protect the interest of the consumers or the business and environment. In case of employers, it has to protect the people's rights, safety, and citizenship. In case of products and transactions, to protect consumers and businesses when buying and selling of goods or services. In case of public services, to maintain the standards of education, health, social care. In case of places and processes, to ensure safety, public health, environmental standards are met. Then in case of finance, to ensure stability and integrity and protect consumers. Case of capital infrastructure, to ensure efficient investment. safely, and planning standards. In case of specific markets, to control prices, to maintain service standards, particularly in monopolistic industries, and for the economy as a whole, to ensure fair competition and economic growth. I could only see these in the short period of time which was given to me, but there can be numerous other areas. It is only illustrative. It gives you an idea that regulation has a role to play in these areas as such. But if one has to judge that is regulation effective, then what should be the criteria? Meaning there should be someone who should regulate the regulators also to see that they are performing their job. So I feel that if you have to ask me what are the characteristics of a good regulatory system, then perhaps I would say that it should be responsive, should be outcome oriented, should be predictable, then it should be risk proportionate, and it should be independent. These things I'll deal with in detail, but just to give you an idea, responsive in the sense that there are different types of interventions which can be made. The intervention should be made in a manner that it brings out the desired behavioral change. It should not be anything more than that, because if it becomes more than that, it will be more restrictive, and then perhaps the organizational behavior will not be suitable for achievement of the ultimate outcomes. It should be outcome oriented in the sense that we should know that is it producing the desired result or not. If it is not producing the desired result, then perhaps we have to think in terms of doing something else. It should be predictable. In fact, any regulatory environment to have certain degree of faith in the eyes of the people at large has to be predictable. If you keep on changing the rules of the game again and again, it creates a degree of uncertainty. So government policies you would have seen more or less remain stable over a period of time, so that it gives it a greater amount of predictability, gives the time to the people at large to make their plans accordingly and implement their policies. Then it should be risk proportionate in the sense that when we will deal with different degrees of regulation, then you would understand that it can be from a very close regulation to a very open self-regulation sort of thing. And it should be risk proportionate in the sense that it should be done only to serve the ultimate purpose that it helps in achieving the outcomes. It should not be anything more than that. And then it should be independent in the sense that if the regulatory agencies also are completely under the control of the government, then the faith or the credibility of the regulatory institution in the eyes of the public would be gone. In the sense that they should be able to pronounce and say things which at times may not be in consonance with the government policies in that respect, if they are right, if it is needed for the development of the sector as such. Now the question is that if you were to design a regulatory system, if you want to say that I want to do this, then what should be the way? In fact, we should learn from the good practices which have been done in some of the developed countries over a period of time. In fact, when we deal with the principles of effective regulation, there are 4 steps which come into my mind, and I've tried to put it in this way. That first is the design of the regulatory system. We'll deal with it in detail. These design principles will help to translate the policy intent and the purpose of the regulation to the design of the overall regulatory framework. If a law gives a broad idea that what is allowed, what is not allowed, how will it be determined whether this is allowed or not allowed would be more detailed in the regulatory environment which will be there, the processes which will be there, which has to be followed. So it gives a reality to the intent which is there in the law, and this has to be reflected in the design element. How we do it, we'll see it in the subsequent slides. The other thing is that you have developed, you have designed a regulatory system. Now you have to analyze the information to to see how things are happening. What is whether the people are following those or not, what is the degree of compliance, if they do not comply, what is the impact, do we need to change the design? That thing can only be determined when you keep on analyzing. There will be different problems, different situations, different issues would be coming. And in order to take a call on those, you will have to collect the relevant information from the people who are being regulated to see what is the impact of the regulation onto them. Once you analyze that, then perhaps is the time to intervene. We will identify the problems, what exists, and then what needs to be done. Which type of action would be required to produce the desirable behavioral change or to achieve the desired outcome, and how the response would be measured at different levels to see that this intervention is effective. And then learn in the process, because either you will change your design itself, or you will intervene in a different manner to see that the desired change happens. So this is what the different stages any regulation goes. One example I would like to give is the Competition Commission of India. That is mandated to see that there is competition is free, and no person is in a position to influence the complete market in respect of a particular thing. So they also do this thing, like they study the first thing, they collect their information, then they intervene in a certain manner. Intervention can be in terms of very strong action to less strong action to asking someone to do something voluntarily, and then they learn in the process, and then keep on the system keeps on running like that. So this is very important. In fact, any regulatory system which does not learn from its experiences over a period of time will become obsolete. It will not be able to produce the desired results. So what we have to see is that it should be seen from the point of view that it is something organic. It is something which has to respond to the situation. You are working in a live environment. You're dealing with people who are not in your administrative control. You want them to change their behavior so that the ultimate objectives for which this particular regulation has come in is met, and the outcomes which are desired as a result of the government policy are achieved. Well, I'll leave it there, because this session is more of introductory in regulation. How do you deal with these issues that will be when the situation comes? Because there cannot be any one size which fits all. Depends upon the area of activity, the profession you are dealing with, and the extent of control which is required, and what is be an effective intervention in an environment to produce the desired results. Well, now someone can ask me that how would you judge a regulation? Well, there are different ways of doing regulation. Well, whatever I could think is that good regulation should be transparent, it should be accountable, it should be proportionate, consistent, and targeted. In fact, when you try to regulate some activity, you should not do something that even those people who are not directly related to it get affected. You know, it has to be produced. If you have to produce the desired result, it should produce the desired result from the people who are intended to be affected, and the rest people should not be affected as a result of that. In fact, government keeps on giving guidance to the policymakers and regulators, like what is to be done, because it is something which is a constant phenomenon. And regulation can take various forms. So I would say, if you put it in a continuum sort of thing, that originally what used to happen, and then when the stage of development, the economy passes through and goes through higher levels of development, how a particular regulation is done. So those are the things which we have to keep in mind. In fact, if you see the continuum, then Earlier, the regulation was thought more in terms of when it was a licensed Raj, when everything had to be have a permit and it was strictly monitored. At that point of time, it was command and control relation. It was more of a rule-based system, and those who did not follow those rules were subject to certain penalties and prosecutions. But when we passed that stage and deregulated the economy, in which we felt that private sector has to play a larger role, then the concept of economic regulation came in. In fact, this was not to, meaning the compliance requirements were reduced a bit. And in fact, they were more prescriptive in nature, what is required to be done. And it was left to the person to comply. And on a test check basis, it was seen whether the compliance is done or not. And in case of any deviation, suitable interventions was made. But when we came to a higher level of, say, development in the whole process, they enforce self-regulation. In fact, in self-regulation, all the players which are there in that sector, in the economy, they join hands and they decide the rules of the game, that what it is, so that no one does anything which is affecting the others in a negative way, or affecting the society at a large in a different manner. And this they among themselves they have a system of self-regulating. Then it came to the voluntary self-regulation. This was something which was left to the organization itself, because here we were sure that they have come up to a level and they have systems in place that they will regulate themselves. In this, I would give an example of many manufacturing industries who, like cement industries and all, where it has been told that you will install the air monitoring parameters, and a real-time reading will go to the pollution control board to say that you have an ambient air quality or not. And meaning this was up to the organization to follow that, and in case it is not being followed, to take necessary action. The higher level can also be that we feel that the people who have to be regulated, they are all responsible players, and they know their duties and responsibilities towards the society at large, towards the other players in the market. So it is through information and education. We tell them what is required to be done, and this is what everyone follows. Then, if the extreme situation can be a free market in which the market is completely allowed to determine the rules of the game, the way things have to go, because we see that the level at which it has come, it is matured enough to take calls for the benefit of the society at large. But let me tell you very honestly, even in the most developed countries of the world, nowhere there is a free market. There are interventions by the government as and when it is required to bring out the desired behavioral change. So these are the different approaches which are there to regulation. And in fact, whenever you have to decide at a particular level, it is the cost and benefits which you have to see. If you are regulating at an extreme level, then perhaps your cost of regulation is going to be very high. Is it bringing the desired benefits or not? The right equilibrium would be at a place where the benefits are more or less the same as the costs of regulations are, and it is producing the desired outcome. In fact, a good regulation, if you have to say, will maximize the benefits while minimizing the compliance costs and unintended consequences. So the benefit of regulations have to be judged from the point of view of the wider society in terms of, say, improved environmental or safety standards, and to the regulated businesses, for example, through increased consumer confidence. But not all of the benefits are necessarily easy to quantify, because certain things are very difficult to put into place. Suppose you mentioned like measuring the air quality. And in fact, air quality, even in the same compound at two different places, would be different. So at times, it is more of a average thing which you have to see, and you have to see it is based more on perception, based on certain statistics which can be relied on, that you could say what are the benefits which are accruing. So whenever we are designing a regulation, we have to think in terms of what degree of regulation is required, and be responsive to the ground realities so that you can make suitable interventions at any point of time. If the cost is more than the benefits of the regulation, then perhaps that sort of regulation is not desirable. Well, I had said there are 4 basic steps: design, analyze, intervene, and learn. The first step is how you design. There are certain parameters when you're designing a regulatory system which you have to keep. The purpose of the regulation should be very clear. If you do not have a very clear-cut purpose, then the objective which is desired to be achieved is not clear, then any amount of effort which is done down the line will not produce the desired change. So it is very important that you are very clear in your mind that why I am bringing this regulation, what is supposed to be achieved. It is something which can be measured and an opinion formed later on whether it has produced the desired result or not. Other thing is in design is ensuring the accountability. It is the accountability of both the person who are being regulated and the regulators. In the sense that regulated in the sense that they should be accountable for certain behaviors which are not permitted, whereas the regulators themselves should not become a center of power or authority. In the sense they start dictating terms which are not envisaged in the original law as such. So it is something which should be designed in a manner that it is really, both the regulated and the regulator are accountable. In fact, you would have seen in CLAT also the company law tribunal is there. Then there is an appellate tribunal also. Similarly, in telecom disputes, appellate tribunal is also there. In case of SEBI also there is an appellate tribunal. That determines the validity of the action taken by the regulators. So you have to design regulation in a manner that both behave in a responsible manner and they are accountable for their actions. Then degree of regulatory independence. This is a very important aspect in designing. The reason is that the more the degree of independence is, the more credibility would be in the eyes of the people who at large are going to follow it. Because if there is no independence, if it follows the government line or say it follows the person who is a dominant player in the market, then the regulatory independence is not there. Regulatory independence means that they should have both the capacity and the capability to say things which is in right, which are correct, and which would produce the desired results, irrespective of what the different interested people have. There are many interest groups everywhere feel about it. What is required to be done in the economy, what would be the suitable intervention which will produce the desired outcome, which will give the benefits at the minimum cost. If they are able to say that, that would be possible, will not be possible unless there is a regulatory independence. Then powers. At the time of powers also, you have to be very clear, because in certain areas, the more powers need to be given because of the type of offenses which can be committed. So powers can be to examine person on oath, or maybe having access to the documents and records. Maybe powers can be in terms of personal appearances, and powers can be also in terms of prescribing penalties and closure of businesses. So it all depends, because power should be commensurate to the objective which you are going to achieve. If you give them more powers than what is required to achieve a particular objective, there is an every chance that it is liable to be misused. So you have to have balance between the powers and the objectives which is supposed to achieve. Then determining the funding model. It is also very important that the source of funding of the regulator should be such that it should not be dependent on someone for meeting its expenses of doing the job. In case they're dependent on funding for doing its basic functions, then that degree of independence will not be there for it to prescribe a particular course of action without any fear or favor. Then designing the organizational structure and the culture. It is also important because the area of intervention is such. If it is pan-India, you have to think it accordingly. Either it goes to only the main cities, or it has to go to the lower levels of governance. And then the type of values and culture which you have to develop within the system, that has to be designed. That certain norms of behavior are expected from the regulators. And in any case, those norms do not need to be violated. So these are the various things which you have to keep in mind while you are designing a regulatory system, that you're very clear what it will achieve. It will, what are the objectives which you have in mind. It will ensure the accountability of both. There would be a degree of regulatory independence. Then what are the powers which it is going to have. Then how it is going to be funded or managed, and then designing an organization structure and culture. So these are the important points when you have to design a regulatory system. So if these are kept in mind, then the intentions which are there in the law or the policy, that can be put in a format in which effective regulation can be done and it can be enforced as such. Then the analyze. This is also a very important aspect, because howsoever good the design may be, if you do not get the information and data in the form you wanted, at the frequency which is wanted, and which is credible, which on the basis of which you can take a decision, it would be very difficult for you to form any opinion. So those systems have to be built in, by which you will get the desired information at the frequency and of the level of credibility which can be basis of your decision making. In fact, here it is not that you have to fill a particular form and then ask them that fill up the form and give me this information, and on that basis you have to keep the citizen perspective also in mind, in the sense that it is not only what is the intent of the law, how it is affecting the citizen, and is it helping the citizen, or it is making compliance more difficult, or they are affecting them in a wrong manner. So that citizen perspective has to be there when you are collecting the information, because unless you have that information about how citizens react to it, or what they want, or are their needs being satisfied, or their expectations being met, it would be very difficult for you to form an opinion which is balanced and which will produce the desired result. Then once you've collected that information, in fact, one other role is that usually it is seen that there are certain orders which are passed by the regulatory agencies, which are interim orders, which tell you what is to be done or what is not to be done. And there is a need to monitor whether these things are being done by the service providers or not. There has to be a mechanism to get that relevant information, that whatever orders have been passed, whether they are being complied with, what is the degree of compliance, or whether certain incentives are given, it is producing the desired result or not. So these are the things which you have to have a source of information which comes on a regular basis to you, so that you are able to monitor. Then engaging with the stakeholders, it is very, very important. Any regulation cannot be done in isolation. Perhaps there is a need to regularly associate with the stakeholders, both on a formal or non-formal basis, so that you get the desired information from them. Certain things are not in black and white and cannot be obtained directly. But then certain information can always be got when you meet them, when you talk to them, you discuss them, and you know the consequences of a particular action or a request. And this would be a very effective engagement, because many things which cannot be written perhaps would be known when you discuss the things threadbare with them. Then ensuring capacity and capability. That is very important for a regulator, in the sense that if your area of activity is very wide, and on an average you receive a lot of communication from the public at large, or you communicate with them directly and they respond to it, there should be a capacity and the capability to be able to handle that and categorize, analyze that so that you can form your opinion. If there is no capacity or capability to analyze that information, it would be very difficult for you to be able to arrive at a particular opinion. And you should always have a forward-looking approach, in the sense it is not necessarily what has happened in the past, but what would you like to happen. That should be the basis of analyzing the information. At times, when certain interventions are made, you do not know what intended. There are certain intended and unintended consequences which happen. So it is very important that you are able to perceive that if I say this, what is going to happen as a result of that, and that has to be taken into account while having your approach in respect of a particular issue. So that was the second step of to analyze, then intervene. Now you've designed a system, you have analyzed the information, you have all means and capability to do it, you are receiving the desired information, and after analysis, you have reached a particular opinion, in the sense that whether the person is doing the right thing or doing it in the right manner, or is he having the desired behavioral change or not, or whether he is in a position to impact others, or is he complying with the rules or not, then you form your opinion that there is a need for change. Now, when the change has to be done, then you have to intervene. This change can take different forms. You can ask him not to do certain things which are not right. You can say that perhaps you can levy a penalty. In an extreme case, you can even debar him from doing that particular practice, So it is, you have to think in terms of what would be the right intervention. The intervention should be commensurate to the extent of deviation which has been done. It's not that a small deviation and you will levy an extreme penalty over it. So if you intervene in a manner which is disproportionate to the extent of non-compliance, then the credibility of the regulatory institution is going to be affected. So perhaps what you need to do is that you have to prioritize what is to be done and then wait for the information. It is not producing then you do another intervention. So there are very different range of regulatory tools which are available, meaning time permitting, sometime we'll discuss on that what are the different range. It can be from advisory to restrictive to penalty based, and even at an extreme case, like in case of pollution and all environmental, it can amount to shutting down the business as such. This is something which we have to think in terms of what type of tools which we have commensurate to the past, which are given to you, and then those have to be exercised in the public interest. Then whatever you do, perhaps you have to have an element of consistency and predictability, in the sense that perhaps more faith in the law comes in the manner in which it is implemented. If you do it in an unbiased manner, which is consistent across the board, anyone with the same level of violation meets the same thing, and anyone, howsoever powerful he may be, if he has committed a certain degree of crime, he should be punished irrespective of what type of influences that particular organization exercises. So this has to be consistency, and there should be a predictability, in the sense that the organization which is violating should know that what is in the offing, and that would be done irrespective of the type of organization it is. And this type of consistency and predictability will give greater amount of credibility to a regulatory institution. Then ensuring interventions are proportionate. I told you, proportionate to the crime which he has done, meaning it should not be excessive. It should only be limited to bringing the desired behavioral change and should be responsible. So that is very important. The reason is that if you keep on doing something, even if it is right, other person starts behaving normally and still you keep on levying penalty on him, then perhaps you are not being responsive. If some desired change has happened, then perhaps it is in right earnestness, those type of interventions which you have done should be removed or reduced so that it encourages the concerned person to bring the desired behavioral change. So, meaning there are different techniques of doing it, but this is an art rather than a science, in the sense that although the rules of the game are there, but then how you have to apply in a real life situation, basing upon the response which you get in a very consistent and a predictable manner, will improve the credibility of the any regulatory system as such. Then the last but not the least, this is the most important, because you're working in a live environment. So you have a lot to learn from that environment, because many things, howsoever good you may be.
हल्की सी तेज कर दो भाई, वो क्वेश्चन आंसर आने वाले हैं उनके.
Question answers? No, 1 or 2 slides more. I'll stop there, and then we can have question answers. Learn.
आवाज तो बंद है ना?
Hello. About learning, I feel it is the most important thing, because by learning, any system becomes more organic, in the sense that it remains more relevant in a real life situation. Once you've established a system, it is working. But then, as you go along with the information or the response which you get from the people at large, or the type of impact which is making, the type of results it is producing, you should be able to measure that performance and see that whether they are producing the desired outcomes or not, and you are not doing anything which would in future make it more difficult to cooperate and coordinate with the people who are going to be affected by the regulated entity, and you are transparent in your functioning as such, that would give a ability to you to be more responsive to them, learn from your experiences, so that you can make more measured interventions at a later date and see whether the desired change has happened or not. So here I would say that these are the 3-4 things which I kept in mind, meaning when you have a regulatory system, it is required, it is different from a law, then it is designed to achieve efficiency and equity. There are certain features, but if you have to design it, you have to design it in a manner that you have created a structure which will be able to deliver. It will have the desired impact. It will produce the desired outcomes or the behavioral change, and perhaps it can continue in that manner, so that the societal good or the people at large can be benefited from those products and services which are within the ambit of the corporate sector to deliver. Well, I'll stop here, because I feel you can keep on and on and on this. Perhaps a lot of people will have things coming in their mind, and they would like to interact and ask from me that what is to be done in a particular situation. I would rather respond to their things than to show some more slides to them. So I'll stop here. Yeah. Have I stopped before the time, or?
No, it is fine, sir. Sir,
Yeah.
sir, due to some technical glitch, we haven't received more questions, but I have received one very important question and 2 questions. One is relating to this, sir. One member is saying, are corporate social responsibility and effective regulation of corporate sector going hand in India? Going hand in hand in India? Because both the topics are interrelated and both the questions are interrelated. So members are asking as a combined question, are corporate social responsibility and effective regulation of corporate sector going hand in hand in India?
Well, that's generally a question to answer, but yes, I will try to respond that in respect of corporate social responsibility, yes, regulation is happening. And in fact, if you know, the Environment Ministry has become very proactive, and there are special courts to handle the offenses and give punishment. And in fact, there are pollution control boards. There's a central pollution control board, and there's a state pollution control boards. They have a full monitoring mechanism to go to the manufacturing organizations to see their extent of emissions, and in fact penalties are levied on them. To say that it is working very effectively may not be true. The reason is that, meaning if you see, meaning why go far away, see Yamuna or see Ganga for that matter, they have been cleaned. The process of cleaning is on for the last 2 decades or so, and we have not done much impact. But if the main thing is that the pollution has to be controlled at source, and unless you have equipments there installed which are working, and there is a system of monitoring, and at the same time perhaps some strict measures will require to be done to bring the desired behavioral change, although the system is there but doesn't happen to be very effective at the moment.
Yes, sir.
Dr. Upadhyay will take a call, I think, because
Yes, sir. Yes, sir. Yes, sir.
he would know more on that. Yeah.
Sir, again, one same question, combined question. Can you suggest steps to bring transparency in corporate social responsibility and effective regulation of corporate sector?
Well, I would say that the process has already been started by SEBI, in which top 1,000 companies are supposed to make their disclosure. You can refine it further. In fact, CAG institution as such, we have taken upon ourselves to have the natural resource accounts for the 7 resources which the CR framework talks about. And in fact, this year we intend to make accounts for mineral and other non-renewable energy resources, pan-India. And we are doing it in collaboration with MOSPI and all the associated parties as such, because we feel that there is a basic principle in management that measurement results in better management. So the first step is that you have to measure what it is, and then see what is the way it is being utilized and what is its rate of utilization, and then what needs to be done so that these resources are used in a more sustainable manner and these are available for our future generations. So this is something which is a challenge, and a country of the size of India, meaning and the type of resources we have, and it is not a very easy task, but still we are making an effort. I think by June or so you would see the first natural resource account in respect of mineral and non-renewable energy resources becoming a reality. In fact, we last 1 year we have already produced a concept paper which was launched by Minister of State of Environment at that point of time. We have even come up with template of accounts, and in fact, we have given standard directions and operating procedures. We created a structure in every state how to collect and collate that information and to produce that account. A lot of training has been done to the people at large. In fact, some of the documents I had shared with Sanjeev Singhal last time when he had visited me. So he has those documents with him, but it is the first step. It is a Herculean task, and I'm sure because as Dr. Badeh was also saying, the SDG we signed in September 2016, and the SDG 2030, we have to meet certain goals and certain targets which are there. And in fact, many of them are related to environment and sustainable things. And if we do not have a structure to generate that sort of information, which is reliable and at a frequency, it will be very difficult for us to make any policy interventions. So through the accounts, we are trying to create that structure, that information is available and which is credible enough to take policy decisions.
Thank you so much, sir. One last question, very technical question regarding the numbers. So one member is saying, how many companies are following corporate social responsibility and how effectively they are regulating it?
Well, the criteria is very clear. Section 135, they are supposed to follow. And if they do not follow, the auditors are supposed to report on it. And if the auditors do not report on it, as far as public sector is concerned, we do the superimposed audit, we are supposed to report on it. And if they still do not comply, then perhaps whatever the penal provisions are there, that will take its due course. But then the point is, it's like this. Unfortunately, in our country, when we see, there is very less of voluntary compliance, where people understand their role and responsibility and come forward and treat it as their duty to do it. It is something when they have a fear of certain thing will be levied on them or they will be monitored closely. That is the time the compliance comes. Perhaps I would encourage everyone who's listening or who's the member there, come forward, be more responsible and show voluntary compliance so that there is nothing which has to be imposed from outside to seek the compliance here.
So thank you so much, sir. Now we are coming to towards the end. It was very nice Friday today. That the Friday morning and afternoon that we have gained a lot through the two very eminent and very knowledgeable speakers. And I am very fortunate to interact with you with both these speakers today. So from the corner of my heart, as well as on behalf of Committee for Members and Practice of Institute of Chartered Accountant of India, I extend my heartiest thanks towards both of you, Dr. K.K. Upadhyay ji and Shri Ram Manoj Jori ji, for sparing your valuable time and for your words of wisdom. Thank you so much, sir. Thank you.
My
Thank you, sir.
pleasure.
Thank you, sir. Thank you.